Welcome to this lecture. Who has seen me lecture before? Hands up. So you all know my style. Just ask questions whenever you have. I don't want to make it a formal lecture. Okay, firstly, I have already changed my job. I'm no longer with Sectorial Global. But it's okay, I'm doing the same old thing. Okay, now I'm doing more like due diligence, whereby I go very in-depth in renewable energy. That's why I have to wear this stupid thing called tie. Hate it. Okay, I was serving on the board of Sectorial Global, as you all know. And before that, I was with SIAS Research. They are one of the organizers, I think, SIAS today. So meeting my old colleague was quite fun. Okay, so I do a lot of consultancy projects, and these are some of my clients, my ex-clients, and some now are my current client as well. And I also lecture quite a fair bit. Okay, these are all the nitty-gritty. Okay, today what I'm going to talk about is sometimes in looking at stocks, right? We have a problem. What do you look for, correct? Where should you start? I remember about when I was in the army, I was very happy when I got my first pager. Okay, why? Because it was something that I can show off. Then when the thing beep, 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 I go around looking, hey, you got call, I need to call, somebody call me. I got an important call. Then 1 year later, I got my first CDMA phone. And I was so proud of it that I slept with it. Okay? Now, during that time, we don't have internet. Even if we have it, it's a 56K kind of a modem, which is very slow. And during that time, investment analysts, they have a very easy job. Why? They don't have much to search. They don't have much to look for. So, and all the information they have come from annual report or plant visit, and it's a very easy life. And everybody's life was very easy. But right now, a click of a button on the internet will enable you to find a lot of things. I can tell you, a lot of things are rubbish. When you actually look at stocks, there's only two things. Why? You either go up or go down. So use a dice to throw. I think you have a higher winning chance than reading all the reports. That's my verdict. Because I came from sell side, after I moved on to buy side, and now I'm doing more like due diligence. It's more like a PI job, even more in-depth into the buy side. I find that reports, analyst reports, I don't know. I don't know how to comment. But then it's very useful because we still need them as a source of information for you to get an idea of how industry runs. And that's why I'm here today, to show you what you should be looking for. What I'm giving you today is just a framework. I'm not going to tell you which stock to buy, which stock to sell. That one you want to know after the lecture or after the talk, you can talk to me. You treat me makan, I'll tell you. Okay or not? Okay? So, in analysis, unlike what is being commonly touted for, the lesser, the better. But of course, the critical ingredient must be there. And too much information can actually impair on one judgment. Because I used to lose a lot of money, like many of the retail investors. And especially for retail investors who are not equipped with a robust framework, you better be careful. Don't read and say, okay, the analyst say buy, you buy, say sell, you sell. After you sell yourself. And even we professionals ourselves cannot be expert in every industry, you know. How can you find an analyst work in oil and gas 10 years, work in consumer 10 years, work in utility 10 years, here 10 years, that 10 years. Then how old is he? 300 years old. Not possible, right? So how can you expect a person who has not worked in the industry to tell you what is happening? No way. Correct or not? That's why for many big brokerage houses, what they do is that they have industry specialists. And the reason why I changed job is because I want to become an industry specialist. After that, I can come out, talk more, and per hour rate also go higher. Correct or not? No, not like that. Just joking. Okay. Anyway, what I'm trying to tell you is that even professionals like us, we cannot be expert in every area. But we have something that you guys don't have. An approach, a way to look at industry, a way to tackle value chain that is applicable to each and every single industry. And after that, we talk to our sources, we talk to our friends, we talk to our colleagues who are expert in this area, suck their info, put into our framework, come up with a conclusion. That is possible. Okay, without further ado, let's go into the property developers. My lectures are very short, very to the point. You will take away something that you can apply immediately. Okay, that's always my theme. First thing is interest rate. Now, in the property developing sector, if you all notice, something strange is going on, you know. The government recently or shall I say a few weeks ago or a few months ago, I can't remember the exact date, what they do with the property market? They do what? Cool down. How they use cool down? Use ice cube. Huh? Or what? They use cooling measure. They levy a very high stamp duty. Correct or not? Now, is our BAP government the only one doing it? No. Who else? Hong Kong? China? In fact, almost everywhere, right? Okay. Except for places maybe like Australia, whereby the land very big, they got more cows than Singaporean. Okay. Those places don't need to have any so-called cooling measure because the property is very cheap. Now, what is going on? You all must remember, government are made up of elite people. These people, before they become ministers or whatever, they were scholars, very smart one, right? Smarter than you, smarter than me. Okay. So this guy got brains. So what are they doing? Why are they applying cooling measure? They foresee what? Bubble. Okay, why they foresee bubble? Let's think logically. Why? Because the interest rate now is very low. And when interest rate is very low, you all know that when things go down too much, what will you do? Come out. Sooner or later, it will come out. Why would it come out? Okay, very simple. The interest rate was low because somebody called Alan Greenspan, not Alan Look, Alan Greenspan, print a lot of money, go on a helicopter and throw, right? That resulted in the interest rate to go down. And that was to stimulate economic growth, correct? But when that happened, it resulted in what? Inflation. It haven't started in US yet because the inflation was exported to where? Singapore, China, Thailand, correct? Very simple. What? You look at how much your bak chor mee costs. Very simple. I always love to use bak chor mee because I love to eat it. And I monitor the price on a daily basis. No lah. Every few months. Okay. Anyway, you know what I mean. Now, inflation is a very big problem. Sooner or later, if they keep printing money, you are going to see US, Europe having big problem facing this. And for policymaker and expert like Alan Greenspan or Paulson, their main concern with the economy is only two things: unemployment and inflation. But they can't control both. So this time round, they control unemployment as in try to lower it down through having economic growth. But when that's gone too far, inflation come back, what would they do? Raise interest rate. And as you all know, if US raise interest rate, China have to follow, Singapore have to follow. For some reason, which of course I'm not going to talk today, it's too long. That was economic theory. So when interest rate increase, you are going to see a lot of people who fully or highly leverage on their property purchase, unable to pay down on their installment. And when that happens, property bubble. And when property bubble occur, there will be a very big problem for consumer because a lot of people when they buy houses, they never think. They thought interest rate always 1.6. The only type of purchase whereby it is safe, I think, will be HDB loan because HDB loan is 2.6% and it's fixed. Even though the government never say 100% fixed, but trust me, it will be fixed because if they don't fix and they rise HDB loan interest rate, double it, they are not going to lose just RGD GRC. They are going to lose more. Correct or not? So politically, they won't do it. Now, if you follow my framework carefully, step by step, is it logical or not? Difficult to understand? No, very simple. That's why I don't understand why sometimes when we analyze things, I look at this figure, that figure, then come up with a story and then say buy or sell. For what? Waste of time only what? No, not really true. If you know what you are doing, very long-winded analysis is useful. But that's only when you have the intelligence, you have the knowledge to digest it. But we as retail investors, trust me, either you don't have the intelligence, or you don't have the detail, or you don't have the time. Correct or not? All of us want quick money and easy to understand. That's why those people selling $3,000 courses are selling like hotcakes. But those costs, please don't go out. You go there, you don't just lose 3,000, you lose more than that. Okay? So interest rate, number one. Interest rate movement will directly dictate how much property developer would make because property developer rely on interest rate for two things: sales and expenses. Property developer need to borrow from the banks to finance their buildings, right? They pay money to maincom pay the subcon, and they build the thing out. And who buy from them? Consumer. And very few of us can go to, let's say, a show flat like Echelon or the one Dines and say, I want to buy a house, here's my money, one whole bag. Possible or not? No way. Normally you do what? Bring go bar. Some bring gold bar, you don't laugh, okay? I know of clients who bring gold bar. My private banker friend tell me, every time he need to drive his BM to fetch the client, put gold bar behind the back seat. Very scary. Okay? Most of us use what? Bank loan. And we have 10% deposit, 20% deposit, that kind. So, interest rate, if it goes up by even a few percentage points, it will hit our wallet. Their demand for property would drop. And some of my friends or students actually tell me, Alan, it's okay what? It's only the PAB government doing it. And all the property developer listed, like CapitaLand, CDL, etc., or even OUE, they are not just having development project in Singapore. I agree. Then where they have it? Mostly in Singapore and China. China even worse. Correct or not? So the whole world is seeing this problem. Because when people got too much money in their hand, they got nowhere to park, all of them went to buy property. Because they think if they buy property, buy big enough, one day they will become like Li Ka-shing. Possible or not? You think Li Ka-shing really buy property until he's so rich? Don't joke with me, come on. If you understand how he make his wealth, that one is another course for another day. I can talk for 3 days, 3 nights on how Li Ka-shing built his wealth. I got a few books on it. But let's don't deviate too much, okay? So interest rate is very important. Next, government policy. These are the second thing you need to look at. I once watched a show, I can't remember the name, it's a drama serial. It's about those very high-profile corporate kind of figure, they fight here, fight there. Then at the end of it, they conclude. In our industry, property developing, actually it's not affected by demand supply, it's affected by what? What the government wants. The government can change the rule of the game, which is very true, no? Because just by what the government did, it can actually affect the land supply, the cost, etc. Okay? So you better watch out. And what is the best way to watch our government policy in Singapore? Very simple, it's so open. Is it Ma Bao Dan now? No. What's his name? Koh Boon Hua. Blog. He got a blog, right? Correct or not? He got a blog. Watch his blog. Sense his tone to let you have an idea what is his policy going to come out. Actually, the government in Singapore always have to give what? Hints. There was a newspaper that came out and said they are going to slash the price of BTO by what? 30% cheaper than what, right? When that piece of newspaper came out, my wife actually tell me, oh dear, how? We just bought our BTO and now 30% cheaper. That means we lugi. Correct or not? Then I said, don't worry. The government said 30% cheaper. 30% cheaper than who? Than what? You think they are really going to slash BTO price by 30% below? If that happened, I'll be the first one to vote against them. Correct or not? If that happened, I will forfeit my down payment. It's not worth it. Correct or not? That won't happen. So watch out. Whenever our government have an immediate policy, they always want to test it out by using what? Mass media and give some speech and see how is the reaction first. This is called what? Testing water. They never say 30% lower than what? If you tell me 30% lower than condo, it's obviously lower than condo by more than 30%, right? So you must catch the words carefully. All these are what you should be looking at and not the buy, sell, hold call on analyst report. Getting or not? Third thing, land banking. Land banking, very important. Why? Because land is scarce in Singapore. Land is also scarce in China. Do you believe me? Land is scarce in China's city, not the rural area. Okay? China is very big. No one like to live in the rural area because the communication is problematic. They can't do their business there. Do you believe me if I tell you, I'm not going to tell you the most atas place in Shanghai. Just the so-called equivalent of the fringe of their CBD in Beijing and Shanghai. Their price is very similar to our condo prices per square feet basis. It's almost the same, I tell you. And the salary they are earning 5 times lower than you and me. Yeah, it's true. Okay? I know some of you have the impression that, okay, we go to Paragon, we see the rich Chinese spending like nobody business, right? They buy their branded Gucci, Prada. Okay, correct or not? Then a lot of Singaporeans have the impression that Chinese are very rich. Yes, Chinese are very rich. Those who come to Singapore are very rich. Those who stay behind them are very poor. This is a fact. Let's look at their country GDP per capita. It's actually very low, quite low. Okay, so what you see is just a tip of the echelon, the apex, which means if you want to look at your property developer, look at what land bank they have on their portfolio in Singapore as well as in China. Because I suspect, actually not suspect, I can confirm with you, many of our property developers listed here, they mainly do their business in 2 countries. Not China, it will be Singapore, right or not? You don't see our property developers doing property in what? In Dubai, in Africa. No way, right? Those are not their turf. Huh? So I have just narrowed down the scope of variable that you should be analyzing. That's one of the reasons why I always mention Far East Organization, because they are one of the largest land banking company in Singapore, even though it's not listed, but I just quote you as an example. And one of the reasons why they are not listed is because their business too good already. What for they list? I'm not saying that those listed companies are lousy, but I'm just telling you that super rich and super powerful companies who do not need cash and is already big enough, they don't list. Like Bloomberg, Hilton, they don't list what? Correct or not? Those of you who have attended my previous lecture, there's one more coming up this coming Saturday on SGX itself. I always tell you who buy IPO. Hey, don't say so loud. Okay? I'm going to repeat the same old thing this Saturday. To me, it's quite boring, but okay, I got different responses. Okay, first, therefore, when I look at companies, I prefer to look not just at fundamental, but as well as the company itself and a bit on technical, okay? So I will share a bit of technical analysis with you today. But before I do that, CapitaLand is a company who is very highly diversified. They have a lot of portfolio and it's a holding company for Capital Mall Trust, Capital Asia, and etc. kind of things. And a lot of people think that their main income comes from property developing. Not really so. Because they also manage a lot of malls and they also derive a very big bulk of their income from what? Property management. You know, one thing I love about CapitaLand, this company is they have a lot of IEITs. Not just the publicly listed, but the privately listed as well, okay? Now, why do I like that? At first, the IEIT belong to them. They craft out part of it, put on SGX list. And when they list, they sell a big bulk of the share away to other investors, right? They still retain 30%, 40% equity. Now, the best thing comes next. Who manage this property? They will set up a subsidiary company who manage this company. And this company is called management company, and they got paid money. And this is what? Riskless profit. Get my point or not? So, it's like left hand pocket go into right hand pocket. That's why this kind of business model I like. But if I'm the shareholder of the IEIT, I will not be so happy. You get my point or not? But it doesn't mean that IEIT cannot buy. Can, but at an appropriate price. And this kind of left to right hand is also not exactly left to right hand. Because when the IEIT got listed, only part of it still belongs to CapitaLand. The rest is all public. But they still get to control it in a certain sense. This is one thing I like. They don't just earn rental income, they also earn property management fee. And those fees that they earn are not cheap. Okay? It's actually quite decent, I would say. In fact, management fees, consultancy fee are the best. Why? Talk only, no need to do things one. No raw material, not linked to economic situation. It's just providing service. And very low in terms of talent requirement, in a sense that it's just a few group of people doing paperwork, shaking hands, drinking red wine, go for golf, buy a building, okay, you make your money. Good deal, correct or not? That's why this model is good. Now, I don't want to describe with you what kind of development they have, because it's too many. You can take a look at that yourself. Now let's move on to the technical side. I'll try to speak a bit louder. Okay. It's on the uptrend, right? All the way up. And now it's dropping. Now, the next, everyone want to know, after this, where will it go? You want to know? I also want to know, but I do not know. What I will do is that, facing this kind of situation, right, I will ask myself, where is the previous low point? It's at here, correct? This one. So this will be what we call the what? Support point. So you should draw a line from here all the way until here. Then you will notice that if the price keep touching or closing to it and rebounds, closing, rebound, you know that this is a very strong support. And when that happens, you can comfortably say that within the near within the next few months horizon, it will never drop below this price. I'm going to tell you a very simple thing, okay? In fact, you can draw it very nicely with, I think, UOB Gehan software, because they provide all these things. In fact, all brokerage houses provide that. I can't draw it because I'm not technically savvy. I'm just using this one from Yahoo Finance. So this is a very simple way to trade it. And where would be your selling exit point? You look at here. This top and this top, this is what I call what? Double top. Which means that most likely, even if it go up, you will never hit beyond this 2 point, which is $4. Then you go and decide. Okay, now it's $3.60, $4. Is it worth putting your money in now to earn that 30 cent, 40 cent potential? And risk, and where's your risk? At most, it will drop to $3.30. So if you go in now $3.60, at most drop to $3.30 when you cut loss, or you go up to $3.90, it's what? Take profit, cut loss, the same. So it's up to you. This is what I always tell my students. I don't make decision for you. I tell you what is the risk, what is the so-called take profit level, and you decide yourself. For me, my style is very simple. When I look at stock, I look at fundamental. After that, I look at the technical analysis, and I will only buy when it's very cheap. And when I say very cheap, dirt cheap. Which is why now I'm holding cash. Because the stock now is not dirt cheap, it is super expensive. All stock. Okay? Okay, CapitaLand. CapitaLand is a very good company. Why? Because they are more focused. Compared to CapitaLand, Capita is more focused. Because they don't really have that kind of breadth compared to Capital, which means that it's easier to analyze. That's the only good thing about it. But in terms of quality, fundamentally driven, is it really that fantastic? Now, beware. CapitaLand, you have a holding company above, which is called what? Capita Corp. So I'm not sure about the management structure in place. I'm not sure whether the holding company bosses is going to have some say in how this company is being managed. That's why I always prefer pure play, which CapitaLand is one, but not Capita. I know some of you out there might be thinking, CapitaLand, or Agong a big property, sure would not go bankrupt. Wrong. This kind of assumption is very dangerous. If you still remember a company called CSM, Chartered Semiconductor, where is it now? Gone. That one also backed by who? Correct or not? And who is Agong? What is Agong's surname? Shh. You all know Ken already, okay? So, doesn't mean that Temasek have a stake. Doesn't mean that GIC have a stake is foolproof. No. Temasek and GIC have a huge portfolio of company. Some of it can went bankrupt. They still can make a lot because for them, their financial muscle is very big. Okay? In fact, just for information, those who bought CSM, Chartered Semiconductor, during IPO, for every $100 you invested, by the time you privatize, your $100 become $1. Sad, very, very tragic. Okay? Those who do not know what is CSM, that means you are still young. It's okay. Okay, the next company, City Development. Now some of you might wake up say, okay, this is a real private company, right or not? Because it's owned by the Quack family. Now, this stock, one thing I want to comment is they are not just property developers. They also manage hotels. Agree? They are more like a hospitality play. So it doesn't mean that CapitaLand, City Development, all three are property developers, they should have the same dynamics. Wrong. No. In fact, if you want to buy City Development, what you are buying into is a company that correlate more strongly with the economic growth. Why? Because hospitality, in a certain sense, rely on what? Tourism. If you expect tourism industry to pick up, if you expect the number of visitors around the world to pick up, because they own a lot of hotels all over the world, then maybe this is a good buy for you. And of course, if you expect tourism to be good and property developing landscape to be good as well, then this will be a double bonus. And this company, one thing I like about it is that in the industry, City Development is known as the most conservative as well as reputable developer. Why? For some reason, history, legacy, the management, the style, okay? This is actually quite well known. To go in-depth into it, you need to read out the history. That's what I can tell you for the time being. And if you look at the way it's structured, it is very slow compared to CapitaLand. Look at the number of REIT that CapitaLand have. Quite a lot, right? And look at the number of deals that City Development have. Not many. I think only CDL Hospitality, right? And what else? They might come out with a new one soon. Got rumors, but rumors are just rumors. Huh? So they are a bit slow. It's a very conservative company. So if you like a developer that focus predominantly in developing property in Singapore, this might be a good choice for you because they don't have much project in China, as I know, in terms of property developing. Okay? Have, but not much. And where do I get all this information from? If you expect me to get it from annual report, I tell you, can, but I got no time. Annual report very thick, Read through every page, I think I will fall asleep. How I get it? Call and ask. Call who? The IR. Call those who work inside and ask them. All these are public information. Huh? You can try to do the same thing. I don't think they respond to you. So how? You need to come for my talk, I tell you. Correct or not? Okay? So there are a few ways you can get information. You want a slow one, read through page by page, also can. After that, you come here and talk. Can or not? Can, if you are knowledgeable enough. I'm not saying that I'm good. It's just that I do a lot of homework since I was young. Even though you look at me, okay, I know you all think that I'm 40 plus. I'm only 35, by the way. I do a lot of homework. That's why I become 45. I mean, look at 45. Too much reading up. Okay, anyway, if you look at this graph, I like this graph. Why? Because it's obviously the price is in a what? Channeling mode. Where was the cooling measure? If I'm not mistaken, the cooling measure is represented by that sharp drop here, correct? After that, it did recover and went on channeling. And right now, why do I say I like this graph? Very simple. If you just draw two lines, which are the two lines? Draw one line here, all the way cut. That means $10. And you go up there, $13, you draw another line. So they are bouncing off $13 and $10. Obviously, it's channeling, correct? So if you believe in technical analysis, if you believe the world is not going to end, there will be no financial crisis for the next few months, $13, which means if you are very conservative, you buy when it's $10.50, you sell when it's $12.50. You can keep playing like that. In fact, this style of play is used by many of the remisiers to play a counter called Genting. So Genting don't just operate a casino business. The stock itself is a casino business. Okay? If you talk to many remisiers, they always say Genting. And you ask them, Genting do what? Casino, no? Beside that, don't know, leh. Good or not? Don't know, leh. Then why you play? Good what? So if you're a trader, this kind of stock, you will like it. Okay? I'm not saying that you should buy at $10.50 or sell at $12.50. No, I'm just giving you suggestion, what I think it is, because the graph show me a lot of things. So you see, I'm not just a pure fundamentalist. Yes, I look at fundamentals as well, and I buy only during crisis, but that is me. You need not follow me. You can have your own judgment. That's why I always tell my students, you have to know your character, which category you fall into. Okay, the next industry let's go into will be utilities player. Now, a lot of people thought that utilities super good but also super boring. Because firstly, there isn't much utility company listed in Singapore. Most of it are in actually US or Hong Kong. And something that utility is stable because they just sell electricity, all of us have to buy it, right? Buy, regular income, dividend pay you, you happy, they happy. But don't expect multi-bagger, blah, things like that. Wrong. Absolutely wrong. Why? Every utility have a different revenue generation model. Take for instance, Sembawang industry. What are they doing? Waste management, right? As well as what? They own who? Sembcorp? Marine. So that one is a subdivision. We don't talk about it. We talk about the utility side of it. Waste management. Yes, they collect rubbish, or they have project, blah, blah, blah. But do you know that they also go into collaboration with a lot of overseas players to do project, to do management business? It's not pure utilities. If they just own power plant, in fact, I don't think they own much power plant nowadays, because I haven't been looking at it for quite some time. Even if it's a pure power plant, don't expect it to be stable income, because there are times whereby the fuel costs, some power plant use coal, some use oil, etc. Power plant sometimes can lose money when their fuel costs increase. And I can say this very clearly because right now I'm going to become an expert in the energy industry in my new job, just 1 month only, so cannot claim expert yet. And I can tell you the energy business is nothing, I mean, of course, the same thing as utilities business is nothing but exciting, and it's not stable. There are some unknown factors. And we take another example, SP Oxnect. Heard of it before? It's listed in Singapore, right? SP Oxnect. Now, SP Oxnect, Singapore Power Australian Network. This company, a lot of people thought that as long as the Australians use electricity, and the more they use, the more business they have and the more money they earn. Wrong again. SP Oxnect don't have power plant. They own the what? Transmission line. And a lot of investors thought that transmission line is just pieces of wire joining there, no big deal. Wrong. You have things like transformer, not the one that can become robot, okay? Transformer meaning to change the voltage. And you have a lot of transmitter, a lot of big machine. And how they get their money, very special, very unique, and not easy to understand. SP Oxnect get their money from both ends. The customer's end and the supplier end. Those who supply the electricity and those who buy from them. Okay, because they are also function as dealer in both gas and electricity. And they don't get their revenue based on how much electricity they transfer. No, they go by what? How much investment they put in, how much capital expenditure they put in this year, and then plug a percentage. That's how they do the business. So the more capital expenditure they spend, the more revenue they get. And who determines this percentage of return from their capex? Australian government. That's why this business model, SP Oxnect, depends on two things. First is how, I use a colloquial term, how akaji they are with the Australian government. That means on how good terms are they with the Australian government. And are they able to have some good friends inside the energy department to give them a more favorable rate? And secondly, are they able to come up with the same capex, okay, but using cheaper procurement? And after that, charge high price for their labor costs. Because ultimately, how much they spend on doing their capex will determine how much return they are going to get it. And of course, the Australian government is not stupid enough to say that they buy anything also recognize. No, there is a certain set of protocol they have to follow where they do their procurement for the wires, what kind of equipment they can buy, all are very strict. So this kind of business does not rely on the economy directly. Even if nobody overnight use electricity in Australia, which is not possible, they will still get paid because it's a percentage of their amount of capex they do. Okay, so it's a very different kind of business. It's not power plant. They don't sell power, for God's sake. Okay, that's why a lot of people thought SP Oxnect is power plant, which I find is very weird because it has been listed for so long and people have this misconception about this stock. Yes, it's given very high dividend yield, and people actually relate it and think that it is like another IEIT. It's not. It's not an IEIT. Okay, it's a power kind of asset business, and it's not even power plant. So you see, this kind of business, there's one thing in common though, economies of scale. The bigger the size, the cheaper or lower the management cost, because it doesn't cost that much, or should I say that many experts to manage the plant, or the transmission line in this case. And there are always hidden risks. Okay, what kind of risks? If they run into accident, the whole transmission line blow up, cannot transmit electricity, they will be fine. But how likelihood it is? This one we do due diligence because I was doing a consultancy project for a client who want to understand more about SP Oxnect. It's a fund. And when I read through all the paper, I found that SP Oxnect bought enough insurance. If any of these things happen, they will not be liable. The third party will be reliable, the insurance company. And I look at the clause of the insurance, it covers things like sabotage, it covers things like flood, it covers things like natural catastrophe, most of it, but it never covers war. It also never covers what happened if the third party went bankrupt. How? So these are all the hidden risks. It's very minimal. And I can only do that in Australia because in Australia the regulations are quite straightforward. But if the same business model, do it in Africa, good luck. Get my point? And of course the fourth thing is government policy. If the government, they lost, the controlling party lost the election and a new government come up, might be different ballgame. Get my point? That's why politics is very important in all these highly regulated business. So if you want to invest in SP Austin, you better pay some attention to the different faction of power within the Australian Parliament. No way. This is what you need to do, okay? No shortcut. That's why sometimes when I look at some of these reports written by analysts from reputable houses, I won't name them, very naive, really. They don't understand what they're writing, to be honest. Okay, the first, of course, is Sectorial Industry. This stock, what they are doing, we have already discussed. Technically speaking, every one of them have a bottom here. Why is this called? Financial crisis. That's why my method of investing in stock nowadays is that I wait for this kind of thing to happen. When this kind of thing happens, the price to book ratio very low. Okay, and that's how I'm doing. But I don't advise this for everyone, because if you wait for this, you wait long. And every 5 years, one time, 7 years, one time. Yes, every 5 years, one time, you wait, you sell, 100% return. Yeah, 100%. Some of the students of my course, my step-by-step analysis course in stock, they tell me, Alan, I want to learn from you the way to make money, like how I make it during the financial crisis, 100%. We are used to 100% return, so show us. Then I tell him, get your refund, go home. Because I don't have this method, unless you wait enough. Okay? So this is what we call once in a lifetime opportunity. And if you look at the low price, from here to here is more than about half a year, right? So when you buy here, you're going to wait for half a year, the price tank there before you start to go up. So not many will have this kind of patience. Okay? So this is one way, what we call crisis investing. Not everybody is suitable. Okay. Anyway, right now what happened is that the share price is having a double top here. This one and this one. It's not a perfect double top, but it's good enough. In technical analysis, close is close enough. And if you recall this point, TA will call it what? Head and shoulder. But we don't bother what term it is. It is just a bloody line whereby you draw here the price, whenever it hit up, you hit down. Enough already. We don't care whether it's double shoulder, triple shoulder, or no shoulder. So 550 seems to be a what? Resistant. Therefore, when you reach 550, you better observe the price action, whether you decide to go in or not. As in, whether it can sell or not, or you will go up. And we know from basic technical analysis, once it breached through 550 and strong momentum go up, it's another up wave. Very simple, not that difficult. And if you ask me where's the downside, there are two downsides. The first one is here. This point and this point, you draw a line, is about 460, 470. That's the support. And once the support is breached, the next level you go down, you will be here, $4. That's how I look at stock. So again, you ask yourself, do you want to buy now or not? Because if you buy now, most likely it will only go to 550. And it has a chance to drop to where? 460 or even for $4. So that's how you look at stock. Risk, return. And ask yourself, fundamentally good or not? Again, fundamental, technical, gel together. Simple? Easy, not difficult. Why make it so difficult? After the end of this lecture, I'm going to tell you a conclusion about what I have taught for the entire session. Okay? So please bear with me. Okay, SP Osneck. This stock must be very careful. Yes, you also find the same kind of opportunity here, where it was 90 cents. Correct or not? Now, 90 cents all the way until 150 is about 50% increase. We look back. Here was what? 250, $5, 100%. So from the crisis till now, 100% point. Correct or not? This one is what? 50% only, right? What is going on? This kind of stock regularity is there. How many people use electricity? None of their business directly. Indirectly still affected. More saver. Correct or not? Whereas for this one, they rely on a lot of revenue from where? From Pepper, what is it called? Transport Marine, as well as their management project, which during crisis got less to do, right? Crisis already, what to do oil? So, during crisis, they are more affected. We don't care their fundamental first. Fundamental might be very good, but people's perception of this company is that it will be affected. Therefore, the drop was much more. That's why if you are income yielding, you are so used to buying REIT, get that 7%, 8%, then this one might be more suitable for you. But don't forget, more safer stock also means that when you go up, you also won't go up that much. This is a fact you have to accept. I know some of you, wow, got stock that won't drop, only can rise one. Have not? Sure have one in your dream. Okay, so this is the end. You want more or not? You want more or not? Yes or no? Yes. Yes, huh? Okay. In stocks, today no doubt the topic is sectorial analysis, yes. But I also want to talk about short-term trading as short as intraday trading. Few days whereby you buy and control your way out. Some of you got good relationship with brokers, with dealers, they can give you T+7. Do you know that? Rich people can still have T+7. How come? The broker hold the money for you. This is called swing trading. Then you have short-term trading whereby you buy and you hold for a few weeks. As well as value investing, you hold for a few months, and long-term investing, anything from more than 1 year to 5 years. So this is the duration. Now, for intraday trading, it's more like momentum. For swing trading, it's like event trigger. And this event trigger kind of things, I would say that it depends on news. You got to gauge news. And there are news everywhere. And therefore, I never do this kind of trading, swing trading. Why? Because market too many noise. But if you belong to a special group of people who are privileged to have inside news, then this style of trading is for you. But please don't get caught, because it's called insider trading. Okay? A lot of people are doing it, don't laugh. Huh? And most of them don't get caught, but they lose their money because they got the wrong news. Come on. If you are not the CEO, not the CFO, you're just an executive in your company, you think by the time the news reach your ear is real. You're just an executive, okay? There's only one kind of people that might get accurate news, the toilet cleaner. When the CEO or CFO in the toilet doing something there, talk the phone, he overheard, that one may be accurate. Other than that, to me, insider trading is bullshit. Because real inside news won't come to your level. Right or not? See? Because I know in Singapore, a lot of remisier and dealer like to tell their client, I got good news one. If he really so accurate, then he will be at the level of who? Peter Lim already. You think he will still serve you? He serve himself only. Okay, the next one is short-term trading, 3 to 6 months. Okay, this one is mainly using TA, technical analysis. Got some reason, got some so-called, what you call, kind of like logical sense. The only thing is that when you do short-term trading, you must be careful. Don't apply technical analysis to every single stock. Only apply to those which are heavily traded. Why? You try to apply technical analysis onto a stock that every day only got 3 lot trading. You make the market, you buy the market move, you sell the market also move. How to use? Correct or not? So only highly liquid stock will work. The next one, value investing, mid-run. This one, look at fundamental, like what I said just now. For property developer, the few pointers, and utilities, the few pointers. It works. The last one, even though I term it as value investors, right, I would prefer to say that it's more like crisis investing. No need to analyze anything. Buy when the market crash. How do you know when market crash? When everybody cry for father, cry for mother. You know market crash already. Then you buy. Then when you know, then when to sell. 50% uprise, 100% uprise, you sell. Very easy. I'm using this method now. Okay, but this method can only give me an average return per year. For me, 15% per year, not much. 1/5. And I can't repeat it using a fund. That means if rich people give me few $1 billion, I can't repeat it. Why? Because when I'm a small fish, I can swim around. I buy, the market won't go up. I sell, the market won't drop. That's why I can do it for my own portfolio. But if I do it for big funds, it won't work. Okay, that's why I can't be a hedge fund manager using this method. Actually, this method, anybody can use, retail investor. But no matter how many times I try to promote, I try to sell this idea, Trust me, people are not patient enough to wait for crisis. I know that. Now, these are the psychological criteria. You all can take a look or take your iPhone photo because I don't have time to go through each of them. Huh? Okay? There are a few group of people who are very successful, who are intraday traders, who are making a lot of money. Yes, they are. But this group of people are what you call super talented. They are able to read the market very well. And many of them end up to become the prop desk trader. If you are in good relationship with my or dealer, ask them, do you know of any prop desk trader in your company? And they will tell you a common thing. When they trade, it's like playing piano. Very fast. That's how you identify a prop desk trader. Okay? For them, they can react very fast using keyboard. They don't use mouth to trade, very small, very slow. They use keyboard, as in the ABCD, the keyboard, not the do, re, mi, fa, so, that one. Okay? So we call them the pianists. This is how the real thing look like. And where they learn their thing from, they don't learn their thing by taking those 5,000 courses outside. They learn their thing by taking lessons from me. You believe? Just joking, okay? Where they got their trade from, I also don't know, okay? It's a very specialized group of people. But definitely not from those outside $5,000 courses. Those people are just, they are lecturer, they are not actually trader. Most of them. I belong to these two groups. Yeah. But I'm a very successful value investing value investor, but I'm still not a mature trader yet. It's still on a learning curve. Not very easy. I have traded for a few years. My success rate is only about 55%. Not very good, but enough to make a living. So, advice for value investor is stop asking which stock can buy and sell. Okay? In fact, based on your character, what should I analyze? How should I analyze stock? That's most important. If you don't like to read reports, you don't like to make analysis, then don't look at FA. Just use TA. Okay? Don't rely fully on annual report as well as analyst report. I was one of the analysts. I know how reliable are my report. And instead, sit down and work hard on establishing your own stock analysis. Stock picking is like doing your own business. You have to set up your own company, and unlike in your full-time job, your boss will not be around to boss you around. So you have to have your own discipline, because that will be your P&L. Okay? Okay, anyway, these are all the courses you want. You can take a look at SGX. I'm not selling courses today, so I just flip it through. Because all these are the usual slides I need to show, because I'm talking on SGX site. Need to do a bit of advertisement for them. But very short advertisement. Now you see, now you don't. Okay, finish. Okay, anyway, this is my Gmail. This is my blog, but my blog nowadays is not active. Very simple. Because every time I write something on blog, a lot of people read it, but none commented. So there was one day I tell, if less than 10 people will respond to this blog, I will stop it for 3 years. You guys can't be so selfish. I want information from you. And guess what? Only 3 reply. But I understand, because we Singaporeans, we like to listen and hear, but we don't like to share. I understand the culture and I respect it. But I got no time now. Since you guys are not willing to share, I have formed a private value investing club, whereby we share on a regular basis, face to face. That's why I have changed my mode. Okay, those who are interested in my blog, you can look at the previous articles. And if you want to see me participating in the blog, maybe 3 years later when I'm more free, after I retire. Now very busy. Okay, any question? Just one? Yes? No, not necessary. You can buy downward also if you are a value investor. When you say you buy in an upward trend, you are a momentum trader. There's no right and wrong. Any way can make money, and any way can also lose money. It depends on your perspective. Like for instance, I'll give you one very short example. Like Fair China. IPO price is about 51 cents if I don't remember. I bought it. The stock went down to less than 30 cents. I hold it until it break even. Am I a good investor? I don't know. I break even. After that, 51 cents become $1, become 150, hard 8. 150 become $2. If you buy at 50 cents, sell at $2, you are a good investor. But after that, we're bankrupt. So those who also buy at 50 cents, who are still bankrupt, good or not good. So time frame very important, correct or not? So after all this saga, am I a good investor in Fair China? Average. Because I didn't lose money, I didn't make money. You see the point or not? Timing is actually more important than anything else. Timing. Okay, maybe I should take one more question. One more? Anyone? Yes? Yeah. Okay, if it keep tanking, like that, going up, how high is the dividend yield? Oh, then you can still wait because it's quite high. It's still quite high, yeah. Then you can still wait. If you ask me to spot market top, a very easy one. When everybody crazy, anything come also go up, and you see stock that dividend yield become 1 point something, still going up, you better be careful. This is called market bubble. It's not difficult. But of course, sometimes the yield might be squeezed to, let's say, 3 or 4%, then it's also considered dangerous. You are buying REIT, right? Yeah, confirm, I know. I actually tell my friends to buy REIT way before the REIT bull run because it doesn't make sense. Right? That time, Suntec REIT, 12%. That's why just when I was in the seminar, the other analyst, Andrea, right, she mentioned buying Suntec REIT, right, is good, right? I agree with her, but I won't buy. Why? Because I'm so used to Suntec giving me 12% yield. I can't use to 6-7%. It's not me, okay? Because I buy only during crisis. So she's not wrong. I'm also not wrong. It's just that we have different character. Okay? So anything is possible. Those who have questions, I will still be around for a while because today is quite early. I usually end my work at 11 p.m. So for me, it's considered early release. Okay? For the rest, see you. Thank you.